Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. Bloomberg cross-asset reporter Isabel Lee is here in our studio. Isabel, what do you have on your radar?
First, let's talk about Caterpillar. So this is a company that presented a dual situationship going on, and that's, I think, becoming a new trend. The first is if tariff remains in place and the economy dips into a recession in the second half, they expect slightly lower sales this year. That's in line with estimates. And the second is without tariffs. If we don't see tariffs, the company said profit will be at the top end of that range with sales little change from last year. And to the earlier point we made, it's such a diverging situation, but it just really paints how much tariffs will affect the economy. And for the quarter, the company posted earnings that fell short of estimates.
We should point out the stock was down as much as 1.7%, right? Up as much as almost 3% and kind of ended just a little bit higher on the day, up about 0.6%.
A roller coaster.
Do you have zero guidance? Do you have no guidance? Do you have one set of guidance or do you have two sets? That's the question.
Yeah, and companies, in terms of how they are rewarded or hurt in terms of stock reaction, it kind of is all over the place. All right. Let's go to Starbucks.
Starbucks, this is interesting because we have the CEO really doubling down on the progress they've made and said that, we're reviving growth, we're doing our best, but he did also admit that, okay, results were disappointing, but under the hood, please focus on that. And if you think about it, he took the helm in September and he's made a lot of changes. He tried to eliminate long lines. He tried to streamline the menu. He didn't want people who came in store to suffer. And to his point, we have same-store sales declining 1%, and that's falling short of estimates. EPS also edged lower. And let's see, the stock today edged lower also by 6%.
Yeah, was down as much as 11%, right? So bounce kind of as the overall market, I feel like came off its lows, but still that's a pretty big hit. Got to appreciate kind of his honesty, though, about some of it.
He seems like he's a really good boss. Remember, he made headlines because of his pay package. They got him from Chipotle and said that, Starbucks is back to working from the office, but the CEO isn't. But
he lives in Newport Beach. He's got to get to the office in Seattle. Have you seen how sunny it is in Newport Beach versus Seattle?
I will say when he was at Chipotle, many folks would weigh in on this, that they were coming off a really rocky time. And in terms of, he took it over just as COVID was kicking in, digital ordering and so on and so forth, really ramping up. And many would say really turned around that company in terms of going forward. All right. Snap. Not a good day.
Not a good day. And this stock really also saw a roller coaster day. It ended the day, but down by just 12%. It was as lower as much as 17% earlier in the day, I think. But they beat revenue estimates just by a narrow margin. They declined to issue a sales forecast for the current period, and I think this is really what spooked investors. And like everyone else, they cited macroeconomic headwinds. Morgan Stanley said that this just speaks to maybe how much worse shape the business is than they previously thought. We got a slew of price target cuts by Guggenheim, Raymond James, Citi, and it's just really one of the many companies warning about how difficult it is to do business in this backdrop.
Okay, what else are you watching?
I have two surprises. So one is Robinhood. This one is interesting because retail investors flock to Robinhood even amid the tariff volatility. But I guess because of the tariff volatility, then you want to trade it. It really depends. Not everyone is just in it for the long-term win. Companies' crypto revenue, though, doubled, but growth slowed from each of the 4 quarters. And share slump in aftermarket trading, it recovered partly by 1.5%. But this was an interesting news because I feel like, it's interesting to see the growth of Robinhood back from the meme stock pandemic glory days to now. It's really a big company that's solidified and has a good reputation. And
it's a $43 billion market cap company.
Yes,
I think
grew.
Yeah.
A lot of people out there would talk about the maturation of the platform.
That's a really great word, maturation. I'm going to use that from now on.
Feel free.
Can we also just point out they boosted their share buyback by $500 million.
They did, and they're really just doubling down on a lot of earnings. They're building on their investing and credit card offerings. They have checkings and savings accounts, and they're continuing really to push beyond their meme stock days.
Okay, you said you had two surprises for us. Robinhood was one of them. What's the other?
eBay. So eBay projected sales for the current quarter that exceeded estimates. And to a certain extent, eBay is really kind of protected from tariffs because more than half of their sales are international. So that leaves them to be less reliant on U.S. consumers buying goods made in China. So that's actually, I didn't realize that. But then I thought that, okay, actually, I don't really know people here who use eBay.
Yeah.
Carol just uses it to buy her collector's items.
I don't use it.
No, I just say that. That's my thing.
It's up 10% in the regular trade, but you're right.
The stock has gained 10% this year, but
Yeah.
little change in extended trading. We'll see the price action tomorrow.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.